Hello, today we are going to solve Jan 2025 paper question number 1. Okay, so Aaira and Benul are in partnership buying and selling goods on credit. The partnership agreement states the following: salaries are 5,000 and Benul has 12,000. Interest on capital is given, and then the following balances were available from the books of accounts. So some information is given. There is also additional information that has happened at 31st December 2024 which has to be adjusted. Finally, the question is 1A. Prepare for Aaira and Benul the statement of profit and loss and other comprehensive income for the year ended 31st December 2024 including an appropriation section. So let's solve this. The first step is, okay, so let's write here. So let's write what are the things that's going to come here. Okay, first one is going to be revenue. Okay, revenue. Then you have opening inventory. Okay, revenue. Then you are supposed to find less cost of sales. So the first one is going to be opening inventory. Let's write all the variables and then fill up the values for it. So opening inventory. Then you have purchases. Then here you have carriage inwards. So let's write carriage inwards. And then you will have less closing inventory. Closing inventory. Okay, so then finally we will have to get the cost of sales. So then you get the gross profit. Okay, so let's write up to this point. Okay, so the first one is the revenue. So let's write revenue. Okay, the revenue is going to be around 425. So the revenue is 425,000. Okay, so let's write here the pounds. So the revenue is 425,000. Then we have opening inventory. Okay, the opening inventory is going to be around 52,000. So let's write that. Then you have, okay, then you have purchases. Okay, so the purchases are going to be around, purchases are going to be around 200,000. So let's write that. And then we have the carriage inwards. So that's going to be 5,500. Okay, then we have to do less closing inventory. So let's write that less closing inventory is given as 62,000, 62,500. So let's write that. So then you find the cost of sales. So let's add up 52,000 plus 200,000 52,000 plus 200,000 plus 5,500 minus 62,500. That's going to be 195,000. So let's put that value. So that is going to be the cost of sales. So 195,000. Then you have the gross profit. The gross profit is going to be around revenue minus the cost of sales. So 425,000 minus 195,000. So that's going to be equal to 230,000. So we have the revenue, opening inventory, then you have the purchases, then you have carriage inwards and less the closing inventory. So you get the cost of sales and then you get the gross profit. Okay, so then the next step, okay, so that is the gross profit. So let's write the gross profit here. And even the cost of sales, we can write it here. To be subtracted. Okay, it has to be subtracted from the revenue. Then we have to add other income. Okay, so let's see if we have any other income. So add other income. Okay, so here if you see, okay, is there any other income? I cannot see any other income, so there is none. So let's leave it for now. Okay, there is no other income available.